Hey everyone, welcome back to our discussion on ThinkScript. My name is Mike Fairbourn. Happy Friday to all of you. It's great to be here with you. We're going to dive on into this. Before we dive into, yes, it is the weekend. It's almost here. It's a fun part of this class teaching and love going through the material. Today, I did want to talk specifically about data that is available natively to us on the platform. Much like there's data that's always available to us in the form of indicators, right? We can pull that historical data, but there is a small amount of data that we can also pull that is sort of like fundamentally based, or at least based upon, what the company reports, corporate information. And building charts on that corporate information can be really useful and effective. I want to talk about one today that I have not seen built yet. I was able to build it this week, and really look forward to sharing that with you today. And yeah, we'll go ahead and dive on into it. I'm joined in the chat by James Boyd. You'll see him in the chat, JB, a friend of mine. Nice to have James here with the rest of you. Alaron, David, Robert Boucher. We've got for checkout, Chris B, Will, Michael. Welcome. If you are new, let us know in the chat, and welcome to all of you that are new joining us. But yeah, I wanted to dive into that today. I always find it helpful to see what is available and what we can graph. There's so much great information that we can see in the form of a chart that's outside of just the open, high, low, and close data. So hopefully this will open up your mind to a few different comments. I do love your comments in this class. In fact, I've gone and dived in, and we've actually had, just along with your comments, there were specific topic requests, but those have helped me to get ideas on what you might be looking at, or just generally interesting things that we could focus in on, because you guys are looking at interesting stuff. So with that, let's hit some disclosures to get the show on the road. Some information here. The information here is for general information purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Paper money software applications for educational purposes only. Investing does involve risk, including the loss of principal. Past performance of any security strategy does not guarantee future results or success. With that, one other note here too, I'll just state, is that we will be looking at some dividend-paying stocks today, just generally speaking, and dividend payments on those companies are not guaranteed. Of course, they can change at any moment. They could stop paying dividends, regardless of the history as well. All right, so we're going to dive into some of this a little bit more. I want to tell you how I kind of identified this goal, just talking about our general steps here to scripting itself. We want to start off with the goal in mind. Can ThinkScripting meet that goal? We want to outline those steps and then apply the tools and write it out. And then finally, of course, we'll share it. We'll test it and share it with everybody as well. But wanted to go into that with you today. And I wanted to start off first. Let's do this. Let's pull up our charts. We can revert back to this very soon here. Let's look at the markets, and markets still making higher highs, higher lows, S&P 500 index. One thing, just as a quick side note, I've been mentioning that I've kind of been tracking a little bit of, and mentioned in my other classes, that if you do take a look at the markets, if you guys do this, I think many of you do, but I look at just these long-term sort of symmetrical formations and positions on the market. Like, that is one giant move right there. It was all a strong upward trend. If I take that down and put that, and I normally use the body of the candles here, but if I put that to the next body, you see what happened? We came right up to this point up top here, and we just kind of paused and kind of rolled over a little bit. I'd put that in place about 2 weeks ago, 3 weeks ago, just saying that could be an area where we had a lot of prior strength up. We had like a pretty good rally here, a smaller rally here, and a smaller rally even here. Same thing we saw here in patterns, a pretty big move, a little bit smaller move, a little bit smaller move than that before we rolled over. We don't know how far we're going to roll over, but we can say presidential election speaking, at least in terms of the past two presidential elections, that election date is, look at that, it's showing up on our calendar for us. November the 5th. We got close. It's not the 4th, it's the 5th. And we generally do tend to pull back to the end of November, the last two presidential election cycles where both President Trump was on both, obviously. That's what makes it similar, is he was on both of those. If you like to do broad market projections, but that is a cool drawing tool, because if you pick it up down here, bottom right-hand corner, it's just to the right of the Fibonacci. It is a Fibonacci, but it is the Fibonacci extension. What it does is it just extends this price range. It's just an easier way than me going on the chart and putting my hand out there and measuring, which I used to do before I had that tool, to be honest with you. I put my hand on the screen and I'd say, here's this move. Okay. What about a similar move over here, like an extension of a flag pattern? I did that all through through the late 90s, I was doing that. But now I have a tool to do it. But you can really get some cool ideas and general projections on where prices might find resistance. When you're at all-time highs, it's kind of hard to find resistance, right? Because there's nothing above it. So you use price projections. All right. Well, today, as I mentioned, I want to talk about, as I was thinking about today, is pulling sort of this native platform data that's native to the platform. In other words, data that we can pull historically. RSI, great example of that. Technical indicators, a great example. We're pulling that data historically over a long period of time, right? How far back can we go? One of the things I loved about the platform, I'll just do this. Why don't we just choose our max over here? S&P 500 goes back to 1920s. The Dow Jones Industrial Average, if you guys could find one that goes back further, I'd just personally like to know. But there's the DJI. That goes back to, let's highlight it. That is 1910 right there. So it does go back a little ways, but hey, that's data. And we can pull data pretty far back on that. Notice, for some reason, it does, I don't have the RSI, but we should be able to pull RSI the whole time because it's open, high, low, and close, right? There's your RSI right there. Voila. Don't need that one. Okay. So we could pull it back historically. Fantastic. That's really, really cool. Now there's data that we can pull as part of the platform. You'd think this would be the case. Like if I go to the Analyze tab and I go to Fundamentals, that I would be able to, let's just say on Apple as example, down through here, I would be able to pull this historically. But I've not been able to do that. I've not been able to pull an ROE, for example, return on equity for something like this. Historically, like you can see over here, the platform is pulling it up. But what we can do is we are able to pull additional pieces of information. For example, let's just go ahead and I'm going to just set this up so we can all just write this out and take a look at it. So we know that we do have, for example, we can pull price data because we just showed it. Obviously, we know that. So we have price we could pull, but there's a couple other things that we can pull, and that would be, let's just bump that up again and do this all over again. There we go. We've got price. We've got dividends can be pulled, right, historically. And also with that, we could pull earnings. Okay. Now, when we have all of these, obviously we can combine them together to create interesting sort of formulas and that can be pulled historically, like a chart, for example. I'm going to give you a couple of examples as we go through this. I'm going to share that with you too, and I'll make sure to have those scripts available. Although they're not guaranteed for timeliness or accuracy, they just pull data from the platform. But I'll have those all available here for you, all the historical scripts that I do have. But say, for example, what could we get from this? You guys have anything else we can get? I'll type in some, and let's just see if you can come up with anything else. But for one, we could have a dividend yield, and I think you've probably seen that script before. If not, I have it. But that just takes price, right? So you got price over here, and you got the dividends. And basically what we're just taking is the dividend payments, if you will. The dividends, I'll just say dividends, and we're dividing that by price. And that's going to give us our dividend yield. Well, we can pull that historically with ThinkScript. We can also pull just earnings by itself and see what the earnings trend is. Very, very interesting to look at a chart and just see historically over long stretches of time, what is the trend of earnings? It'll look a lot like this if it's going up, because it's looking at every quarter. And sometimes you'll see another one up, sideways up. Earnings behind the scenes. How are the fundamentals performing relative to the underlying stock? That's what we're seeing here with earnings. And that can be a trend that could be looked at, that could be pulled historically as well. So that's just simply just earnings by itself. I mentioned the trend of earnings, up, down, sideways, whatever the case might be. What else could we have? Well, let's see. We've got price and we've got earnings. We know that could be a PE ratio. So the PE ratio would just be price divided by earnings, right? It's a price multiple, or also known as a valuation metric. We could see that historically. And let's just use that. Let's use this as an example as we dive on into this right now. I should have this up and ready to go, although I didn't pull that when I pulled the yield previously, but let me show it to you right now. If I'm taking a look at Apple and I wanted to go back, let's see, 5 years, we'll pull 5 years worth of data. Let's take off a couple of our just technical indicators down below, clear this up a little bit. I'm going to go in now and I'm going to add in historical is how I've titled everything. There's a historical PE ratio right there. This is a look at that PE ratio right here, and it's pulling the data over a 1 year period of time as it stands right now. I'm going to pull it up right now. I'm going to show this to you. It's 252, but what it can do is it can pull this up over long stretches of time as well. For example, down here, this is the coloring we've got right now. We've got, let's see, pink. Can you see that okay? I really can't see it that well. Let's make an adjustment here on our chart. We could turn it into anything. Even black is fine. Is an average. It's an average PE ratio, but you get to kind of see what this PE ratio looks like. So let's do this. I'm going to go down here. I'm going to put this is green. The simple moving average will be, well, let's just go, for example, blue is right on top. That's fine. And now you can see a historical PE ratio over time, but I believe it has to be actually on a daily chart basis. I think so. Let me just take a look at this real quick. It does have some adjustments in here. There might have been one that was a little bit more refined. No, I think that's the only one I've got. I've tried a couple of these, but there you go. In terms of the PE ratio, what it could show us is where Apple is at right now and where it has been historically speaking. Apple, okay. We could do the same thing with the dividend yield as well, but we could see it historically and just track the movements of the PE ratio as opposed to just a simple snapshot in time. In other words, where might this stock have an area where it may tend to kind of bottom at a lower level, right? And where is the PE ratio relative to the moving average, for example, as well, of the PE itself? And you can track areas where it might be undervalued. I'm going to pull this up right now. I might have a different link for that one that I can share that might be a little bit more updated, perhaps. Go back to my historical yield. So you've probably seen this right here. And this is the yield. Again, very difficult to see. This is the yield of, I'm going to try to change this here too. The dividend yield over a period of time. And it's got different labels, colors. Like I said, we really can't see that too well, but we'll go ahead and just really thicken that up. It's got the highs and the lows as an overbought or oversold range of 20%. You could barely see that in there, but these are the kind of the lighter colored blue lines. Right now, I just want to look and show you what we've got over here. For example, how can this be useful? Big picture based on what we already have. Well, you come over here and you could say, well, where is it that the PE rate, excuse me, the dividend yield on a particular stock might tend to bottom. Company, let's say, for example, the stock might bottom because the yield is high. I'm going to have to go back a little bit further on this one. Let's see. I think we can go. Yeah. So this one is just set, works daily, weekly, perfectly. You can see over here. Notice over here with me, this is like Microsoft. This might not be a great example because we're dealing with a company that doesn't pay a lot in terms of a dividend yield, dividends themselves. But looking over here at Pepsi, it's interesting. Pepsi, we could see up top here when we get above 3%, a 3% range, as an example. It's kind of been in a sideways channel for a little bit, but let me highlight this. Above 3% range in general. Notice you're getting bottoms. this could be, and 3% is one of those numbers that a lot of dividend investors will look for. They say historically, if I get a 3% dividend yield, I'm oftentimes interested, all else being equal. Maybe they're very interested in a particular company because it's got a higher dividend yield. But those that are really into dividends will understand that they understand kind of the general trend. It's really the trend we're after here. You can have data, but it's the trend that gives you that information. A snapshot in time is one thing, but if you can see that historically that tends to associate with bottoms, it's an interesting company to maybe look at where, hey, that could also be associated with, what do we see up top here? We see a sideways moving channel right through there. Look at this. Look at that. I mean, you got to, let's see if I can, well, there's a little bit of a support level right through there. We dipped a little bit there, that's true, but could that be interesting as a support level? We're clearly above that 3% range. If the companies keep raising the dividends and the stock goes sideways, well, that's going to put more pressure on potentially the stock to go higher because the dividend yield might be going higher. This company has a long history of paying dividends. So these are all kind of really interesting factors that you would never otherwise see if you can't pull historical data. So just to recap, some stocks, dividend paying stocks, might find bottoms, long-term, big picture bottoms, when a yield hits a certain level. I'm going to show you on the Dividend Aristocrats list over here. It's actually the 25 plus year dividends that we talk about. These companies have been raising dividends for at least the past 25 years. Here is J&J, for example. When do you see certain points? That is also 3%. I said just keep 3% in mind on dividend yielders. A lot of times you're going to find when they get close to that 3% or they just get barely above it, it starts to attract income-minded investors. It starts to go out in some of these dividend magazines, income investing type publications, where they'll publish it and say, yeah, Johnson & Johnson above 3% yield first time in, however long. Got above 3% here and all through here. That turned out to be a fairly big bottom, didn't it? Range. It's also above 3%. That beats just going in and looking at any given time and saying, is it above 3% or not, or whatever the case might be. It's still slightly close to 3% as well. Okay, but there you have it. So that could be an interesting tool. Let me go ahead and just share this right now if you don't have it already. This is not the one I was going to talk about today. There's one that has not been built yet, but I wanted to give you like a little bit of a background as to, so you have a general sense of what can be used with the data, right? Because it's not just the data, it's the trend of the data. Does it provide opportunities at certain levels? Okay, I will share that in the chat for you right there, and you got it. Now, by the way, we can do the same thing with the PE ratio. Let me work on that PE ratio. I think I have a different one that doesn't have so many kinks in it. It's the bugs are worked out. I thought it was working, but I knew this one was good. I just have been using a different one, not on this demo account, actually. Thought I had the same ones. All right, but that could be really fun to look at, particularly on those companies that traders, investors are looking at over here, on companies that have a long history of paying those dividends. And you've got them right there. I think 68 we've got this year that have raised dividends at least 25 years consecutively, each and every year, raising them, not missing a single year. You recognize some of these. You got Coke in there, AbbVie, Abbott Labs, and others. Caterpillar's in there. What is Cat? By the way, just a quick note. I wanted to see Cat, see where we're at on Cat. Okay, look down here with me. This one's a little bit different, 2.5%, but you can have a lot of fun with this. 2.5% longer term bottom. Keep that in the back of your mind. Right now, this stock is generally, for those investors that are looking at this as an income player, because it is an aristocrat, it's really, really quite low. In fact, we are below the 20% range. Okay, I got to make sure you can see that. Remember to go in here and adjust that 20% level. And you can adjust these overbought or oversold right here. But check this out. If I go high, look at that, light green. Who can see light green? Not me. Let's just make them the same color, but not light green. There we go. Is that better? Okay, so now you can actually see, okay, it's down below that level. Top 20%, where sometimes they'll bottom, the price of the stock will bottom because the dividend yield is very high. Investors might be attracted to it. the bottom range where it's really not an income investment as much, right? It's more like a growth stock, and the risks are quite high in terms of that dividend yield maybe snapping back. That means prices coming down. All else equal. One way to look at it. So I wanted to throw that out there to you because I wanted to talk next about this one that I've been using this week. Where are you? There you are. Okay. It is an interesting indicator. It's referred to as the earnings yield, right? The earnings yield. Now, I know James has talked about this in his fundamental class. This is a cool way to use the earnings yield on a historical basis so we can actually see what that data has been telling us and what kind of a thesis it might support in terms of an earnings yield. What does the earnings yield do? The earnings yield, first of all, it's simply just earnings. You're looking at earnings relative to price. This is something I had read about years ago. I know Warren Buffett looks at this figure, but it's looked as a percent. It's like when you buy a stock, what kind of an earnings return is the company giving me for this stock at this price? This is all earnings per share, obviously, because we're dealing with publicly traded companies. But generally speaking, the range here, and I'm just going to put this down. So this is there can be a number of different ranges, but generally, okay, some investors will look for 7 to 8% or higher is what they want to see. The earnings yield. Now, I pulled up the earnings yield, I want to say it was a couple weeks ago in one of my classes, and I've been working on it in terms of the historical, just piecing it together a little bit. It wasn't that bad. Once I had done this, I kind of identified the goal, what data is available, and is there anything interesting that I can use from it? Okay. Can it meet the goal? And it can, because these are natively provided data points, right, that we can use right off the thinkorswim platform. So with that, let me show you how it's done and what we're looking at here. So before I dive into that, I did create this one in my class, but it was just a single kind of point in time. It's just the earnings yield right now as it stands. And you can see what those earnings yield look like. Some of these are really quite high. Some of them are low. I do want to compare that with another indicator before we're done to give us a general sense of some of the prices that we're looking at here. But kind of looking at some of these, this is where we stand on where some might be generating a higher earnings yield relative to others out there. I mean, this is clearly above the 7 and 8% range right in here. And some of these are oil related. Not all of them. I mean, there's MetLife, Hewlett Packard Enterprises is in there. Some others, BWA, Borg Warner, and a few others. But these are all, north of just 8%, a little bit higher than 8 all the way up. And I'm just using the S&P 500 as a guide. So kind of a great way to look at this. But we want to tie this into a trend where we can see where it's at, and maybe perhaps where might some of the big fundamental investors be buying at. I'm talking like institutions. Where might they see the earnings yield being really quite high? Okay, we're going to combine this with a return on equity figure here in just a second, a column, which is easy to do. But before I do that, folks, time out. I did want to state that here is that MACD crossover. I had a few questions about it this week, and I actually had a question on it in just the last class I did a chat on, but it's right here. This is the MACD crossover, and all it's looking for here, I'll just edit that formula and show it to you right now. So we just did, it's the 2-line MACD, just to answer the questions of those people that came to our group today. Basically, we have a 2-line MACD, also referred to as the value line MACD, okay? The core MACD line, there's the value, and then the average. So we just have the price of the stock going up, I should say the value line breaking above the MACD average in the last 3 bars is what we're doing here. Okay, and that's what that is. I could put this out too, just so you have it, because that was a question that came up. And I said I'd share it. Of course, all of these will be available in the description section if you click on more, for those of you viewing this afterwards. But here is the MACD script, so you've got it. We're on the same page. Okay, and by the way, once again, the scripts aren't guaranteed for accuracy or timeliness. They're just taking the data from the platform, throwing it in the formula, and you got it. Okay, So there we go. Oh, thanks. For checkout says historically, I'm unable to pull it up on the paper money account. Okay, so you're going to be able to get it on your. That's true. That's a good point. Now, I don't think all of that data is able to be pulled from there um, on the paper money. Right. Okay, so I'm in the demo account, which it's basically provides all the information that we can teach off. It's like it is a paper money account, but it does provide some of the real well, some of the data that is available on a live account. So thank you for making that distinction. That's a great point. Okay. Let's see. Beauty says, just curious, is it possible to run a ThinkScript that can calculate minus five or minus 10% of a 52-week new high? Yes, it is. Yes, it is. It's definitely possible. That's one we can work on too. And by the way, those topic requests, I can put those in. By the way, thank you, Robert. Some notes on there as well. Let's see. First, Mike, aren't dividend yielding stocks have low volatility? They do have low volatility. They have a low beta, right? Low betas. We could put that column in here as well. But you're right. They do have a low beta, so they're not as volatile as the market. The beta being a reference to the volatility of the S&P 500, and we can take a look at the beta, and you can see that these should the stock, excuse me, the S&P 500 has a beta of 1, and look how many of these are less than 1. I mean, that's the 500, sorry. If we were to pull up over here, are aristocrats, you can see that many of them are under 100. So they're very slow. I mean, but a lot of them, they go through cycles, and a lot of them look like growth stocks, honestly, from time to time. They can, right? If they're undervalued enough. For sure. Absolutely. Okay. Good stuff, you guys. So let's do this. I'm going to go ahead and show this to you. So there's our dividend yield, and this could be a good reference point for income paying stocks specifically. But what about growth stocks? How are they doing? But this is a kind of a reference on, how much of an earnings percent can we get, which is, based on the price we're buying at right now, what is that company yielding in terms of earnings for us? So if you buy a company out there, what's the return on that based on an earnings, uh, number? What are we getting? So we've got our general ranges we were talking about. Let's go back to just a daily chart here. We'll pull it up right now. So this was it. Haven't seen it yet. There it is, the historical earnings yield. And we'll take a look at it. And I'm going to take this one off. And there you go. There's the earnings yield. Now, I did back test it. I confirmed it. I went back and looked at the pricing, and it's working. It's giving me this. So on my other account, it's defaulting to those lines on this account. I'm going to change it though, once and for all here. And just remember, you guys could do this over here too. But yeah, we can keep it. Now let's mix it up a little bit. We could just say we'll go 3. We're going to turn it to a black, and we can use these lines up top here. Yeah, I made some adjustments. Oh, okay, let's see, 3, 3, and we'll move this around just to change the colors so we could see it a little bit easier. The black's fine as well. Both of these, there and there. Okay, so click, and there you have it. All right. Actually, just change this to a blue very quickly so you can see a little easier. There you go. So there's your line down here. So what is the earnings yield right now? Well, the earnings yield on this company is actually quite low. You could see that based upon the earnings, if the earnings of the company are strengthening, if they are going higher, what would that do to the earnings yield? Well, all else equal, if you're looking at earnings and we're dividing that by price, okay, all else equal, if earnings are going higher, the earnings yield itself would go up. Now, if prices go up even faster, well, then that earning yield would go down. But so it gives you kind of a value reference. What do I get at the price that I'm buying at now? That's what we're looking at. And historically, what are some of those big levels? Let's really go back a little bit further on this and see what we've got. Let's go back to a 2-year. And so where's the spike? The spike comes up. It's really close to, well, what were we saying is the general range that a lot of long-term investors will look at, 7 to 8% or higher, clearly. That did go a little bit higher. That's it. You know, it's funny that 20% number for cat lines up right at just about approximately 8, that upper range that traders might like to see. You got above it right there. So that's interesting as long as cat's earnings and what kind of return they can generate remains strong. Okay. Look down here with me. We are clearly above. Let's see, what numbers did we have here? This is about it's above 7.5 right here. So right here, this range, the earnings yield at those lows, the earnings yield is equal to approximately 7.5. Now, that was a high water mark. But remember, if you buy the stock at this level, that's the percent that you're getting in terms of an earnings yield. Even if it goes higher, where did we buy it at? As in this paper money example. Well, we bought it down there at that level, which was about just above 200 over here. All right. So the idea is to watch these for indications. Now, another quick indication I wanted to state is what was happening down here. You know what was happening on the chart? We've got to tap into our chart knowledge too. We can use these technical indicators. We can use ThinkScript to our advantage here. There's your downward sloping trend. What happens? The trend, folks, gets broken. A lot of times if you get a downward sloping trend line that breaks, you can get a change in trend next. You got it right there. You broke above those highs right there. I'm going to zoom in. It's going to make everything else look weird over here. But there you go. Just to kind of zoom in on it, you can kind of see. So my point is this. If you are operating at a historically high, and you can go back, several years on this and just take a look and see where those numbers line up. But if you are operating at a high level over here that might be matching, let's say, a range that this company historically goes down to before it begins to bounce, well, it's possible that that area might be stronger, not weaker, but possibly stronger support. And I'm just going to put a question mark there because, yeah, and by the way, we're dealing with a company that's maybe has a history of being able to perform and to generate those earnings. There is one formula, though, that I think is really helpful to compare it against, and that would be the ROE. And I'm just going to throw this, that's not, we don't, the ROE, okay, is net income divided by equity. And so what is equity? That's what's owned. And so you're comparing what the company is able to generate in terms of income for the owners of the company, whoever owns it, right? Shareholders, the equity itself, shareholders' equity, what's owned within the business. So you're offsetting assets to liabilities, you're getting equity. What kind of return is the company making for the shareholders? That's what ROE is all about. Okay. We can't natively pull that data, so I can't go over here and show you. There'd be some really cool stuff if I could. But we can do something else that's really helpful that we can get quickly with thinkorswim on ThinkScript. I should just say in the columns here under the Market Watch tab and then quotes. Now what I'm going to do is we're going to switch from the dividend payers. Maybe we'll go to some of those areas that are maybe have a little bit more some more growth stocks associated with them, because this is kind of we're looking for earnings to be growing and we want to get a relative sort of valuation on those earnings metrics. Okay, so let's just see, first of all, what do we have that's really performing the highest up top here? Oh, that's interesting. These are popping in down here in a 4. I'll have to adjust this. But so this shows 46, but they're right in that range. So that needs to be adjusted. Anyhow, this is what you got. Charter Communications has the highest earnings yield right now. But how is that yield relative to a company's ROE? I'm going to right click up top. Can the company return? What's their return to shareholders in the form of net income? Return, let's see, is it ROE? Would that show up? It does. return on equity. So we do have a column we can compare it right next to, which is really getting quite in depth, and we can kind of see what's going on. And that's actually really quite strong right there too. There are some aspects of return on equity that need to be looked into as well, but there's a good, interesting reference point right there. Return on equity. Charter Communications. Okay. Well, let's look at just some of these and see what we've got. At least the top two, Biogen, and the ROE here is actually quite low on Kraft Heinz. Warren Buffett, just to name, just in general, and people have mentioned that he had stated, and you can look, I don't have anything specific, so you'd have to go and pull that up, but there's a lot of news sources on this. But he looks at that ROE, and I'll go back over here because we are adding ROE to our list. And so we are going to combine then earnings yield with just a reference point as well, just to add to it. And I would say return on equity. Again, that is net income relative to equity. Okay, and generally, some investors will look for 12% or higher, although I know that like some famous investors have said, hey, they like 15 or higher. So the higher, the better, for sure, on both of these. But those are the two right there. Okay, so we can have these side by side, which is helpful. It's really quite interesting to kind of take a look at as you come over here and pull that back up again. So you got this reference point. Let's look at these two. CHTR, I'm going to pull them up and we'll look at each of these. CHTR. Okay, there it is. So CHTR, it seems like this upper band, double digits is really where it tends to bottom sometimes, and that will run lower, maybe towards the bottom of the channel. You kind of saw this over here as well. Oh, let me point to where I'm at, right over here. Over here. I'm just looking at this line as a guide. So all through here, interesting. That was the bottom. And through here as well, you got like a high or low and a bounce. And here we are again. So you can be watching these levels, but just in general, we're clearly higher than we had previously been. And perhaps, we don't know, we'd want to look into it. The ROE is really quite high, but look over here with me. You see the long term holding right there at that gap. See the gap support around 320? Hasn't gone below there. Perhaps it might be bolstered by investors saying, some maybe large term investors too might be saying, yeah, there's actually decent value here. We're getting a pretty good earnings return, right? Return on earnings, or the yield on earnings. So some could be watching this. I am seeing the trend line break come in here and perhaps just barely starting to get above a higher high. It's an expensive stock price-wise, I guess. That's all relative, but it is, it's in the 300s. I'll put it that way. There's earnings coming up as well, but that is interesting. Okay, it does not have a dividend yield, right? So we don't have that reference point, but what we do have is an earnings yield. A lot of companies don't pay dividends, but this could be used as certainly an alternative in that regard. A quick note too, if we are looking for a track record of ROE, you can go over into the Analyze tab and then scoot on down to Fundamentals, and then you're going to see it right there. It's really great that we have this. But moving from oldest to newest, right there is a trend of return on equity. And you can see it's holding strong at 38. It has been a little bit higher there, but what we're looking for is growth or consistency. You got that through here, right? You do. I mean, that's growing, and it's been holding there too. So an interesting reference there. The other one we saw up top was BIIB. And okay, so a couple of things here, right? Here's BIIB. Downward sloping trend. What do you guys do? You just jump in and buy with both hands when the trend is going lower? Well, it's a downtrend. And what does that mean? It's a biotech stock. We don't know. We don't know what their kind of their inventory of drugs is, what the patent situation is, or companies falling off patent, or whatever the case might be. Well, they could be, but we can say this: over the past 2 years, we're really quite high. Let's go ahead and just take a look a little bit further and just see what this earnings yield shows us, going back historically a little bit further in time. We'll go back to a 5-year, and I'll highlight that. You can see actually that this is really important to do too, is that, this company might be a very different company than it was like 5 years ago. And you can get that because these companies constantly change. They get new drugs coming up and new drugs falling off patent. You notice over here that this is very, very similar, this range. It's all very, very similar. And I'd be more comfortable going back, let's say, maybe 3 or 4 years as opposed to 5 years. Just so much you can get with this data right here at your fingertips that otherwise you'd never know, because all we get is just a snapshot in time. Oh, the earnings yield is 8.9%, which could be high, but in reference to what? Let's do this. Let's go back a 3 year and we'll take a look at this. So a lot of it is understanding, for example, in this case, what can we gather from fundamental trends? This looks fairly interesting. It seems like that level was where we kind of bounced off of last time. And here we are entering that range again. What could be very intriguing, you could take a look right there at your earnings and just see what happens on earnings. We're in the midst of an earnings cycle, right? What's expected? What happened? Could this stock bottom at a long-term level of support down here? It gives you time to look at it if you wanted to. It's a different way to look at things, but a way nonetheless to do it. And what else did we have? We looked at it on our Market Watch, and we went through a few other items here. There was the NASDAQ 100. It's going to take a second to load up. I've got a lot of columns in here, but it's loading. Let's hit one more though and just see what we've got, folks. Did I share this yet? I don't think I did. No. Let's share it right now so you have it. Sorry about that. I skipped that part. Here it is right now. Earnings yield. Share. Okay. It is in the chat. Okay. So you've got it now. And I flipped off that and it's loaded. Okay, great. Okay, so what else do we have kind of at the top here? Look at Dollar Tree, the return on equity. Whoa, pretty low, -12. I think we'll avoid that one as we look at it. PCAR, actually quite high for both categories, right? Above the 7 to 8% range. And then you can see where we're at there. And PDD. Let's just look at those two and then see PCAR and PDD. PCAR. P. There you go. Wow. So actually, in terms of the earnings yield, it's actually, even though it's higher, historically, it has been substantially higher. And you can see over here that it's had a really strong run up. And so it might be outside of the range of clearly where it's historically been. PPD. Oh, okay. I did that right? No. Is it PDD? PDD. No, that might be another issue. Okay. It's a different type of a stock, I believe there. So I'm not going to worry about that one. Cisco. We'll finish with that one. Okay. Interesting one here on Cisco. This one lines up fairly well with earnings in general. Right here at the 8% again. Keep that in mind. 8 bottom. We could call it a bottom because historically we're looking at that bottom right there. Bottom. It bottomed there. We got close there. It did bounce off those lows. Now it did go back up, but it was forming maybe a longer term bottom. Earnings, folks, held in check. Did it pass our ROE? ROE came in at 22 if you saw it. 22 approximately was the ROE, clearly above even like 15%, right? Look where we're at right now. Held up there for a long time. Was this a buying range? This is one of those companies that had some pretty, interesting accumulation off the money flow too. It's another way to potentially spot value around the earnings of the company. And look down here with me at the very end, right down there at 45. Interesting support there, right? Support 45. Support, that is, at 45, a big bounce with an earnings confirmation. Then we sold off a little bit. But the idea is there is to try to pick up on that price in this example, right? It's in that range. It's in that high level. It's a fascinating example there on Cisco. And actually, we're kind of running the resistance up here. But look at that earnings report right there. Earnings gap in place. Sometimes those high ROEs can help kind of keep that parked in the background. So, folks, anyways, that's what my discussion was today. I shared 3 of those scripts today. I'll have those again in the more section for the archive broadcast. Thanks so much, James, for all your points there, folks. Love to see the comments going back and forth. Let's see. Does the time frame matter in the study? It did not. No, it doesn't. It works. It goes back. This one works. I've got to fix the one on the PE ratio. I'll do that before I share it. Maybe we'll do that next week, though. I've got to look at that one. Okay. Yeah, so yeah, I didn't think it was out there, so I wanted to build this one so you guys had it exactly. But that last one I shared is that script for you there for the earnings yield, so you can check it out historically. Now, with that, folks, bottom right hand corner of the screen, smash that subscribe button. Love to have you on board. And also, if you found today's presentation helpful, informative, hit the like button as well. Everybody have a fantastic rest of the week. Look forward to future topics.